Remember, y'all, don't try to predict, just react. One of my favorite movies, Enter the Dragon, with Bruce Lee in it. And in one of the first scenes in the movie, in the beginning, he said, it's like the finger that points at the moon. Don't focus on the finger or you're going to miss all that heavenly glory. I love that. And I try to think about that philosophy and how it can relate to trading. For me, it's like if you're trying to predict the market on where it's going to head next, if you're trying to predict or trying to call a top or a bottom, to me, that's like you're focusing on the finger. You're focusing on the finger instead of seeing where the finger is pointing to. You're too focused on the finger that you're missing out on the heavenly glory. And to me, the glory of the price action is the setups, because the setups are the triggers to enter calls or enter puts. You play it level to level. If you're too focused on the finger, you're too focused on trying to predict, you're going to miss the price action. You're going to miss all that movement, all that context, all that beauty. I love it. Anyways, so yesterday, it was chop day, tradable, but daily chart, it was a chop day. Okay, not yesterday, very, very nice false breakout setup there at my 552.5 level. I had a nice little false breakout setup, and that led to a very, very nice drop to the downside. But before we even had the false breakout setup we did on the first candle, the 930 candle, it actually was a bounce, okay? A bounce off the 551-ish level, cleared my 552.5 level. Then when we had the false breakout, I did mention in the group, 552.5 cleared, putting 554 and 555.4 in play. No puts unless 552.5 fail as support. So if you did enter calls on the 552.5 breakout, it's one of those situations where you had to respect your stop loss. Hopefully you guys had a stop loss, okay? It happens, and like I always tell people, no one has a 100% trading record in the stock market, okay? Nobody is the Floyd Mayweather of the stock market, okay? But it's about how you take your losses that makes you great. No one can avoid a loss. You're not going to be right on everything. All you need is 51% to 60%. At least 51%. Be more right than wrong with proper stop loss, and you're going to be fine. So if you did try to enter the breakout, it looked like it was just a bull trap, intraday bull trap where we had a false breakout. Now, if you had the false breakout, I did alert it, false breakout right here. I did alert it to the group, false breakout with 551 failing or lower, and had lower targets to play, 549.6, 548, and 545. Okay, wrote it right there. No calls unless 551 can recapture. You guys can see it just broke down 551. Also eventually broke down 549.6, which was a critical level as well. Okay, so a couple of just false breakout and just started pushing downwards. So like I said, in that situation, when you buy calls, you get faked out like that, you always got to respect your stop loss. Now, when I did write about the false breakout, when you see that, that's your signal, okay? Like, okay, I entered calls. Uncle mentioned it's a false breakout. That's bearish. I should get out of my calls. And if you do see that you're not in a position, you see a false breakout, like, hey, that's a good setup for some puts, at least for a level-to-level move. And it was very nice. Nice drop to the downside. But once we hit my 545 level, it was about a $7, $8 drop. But once we hit my 545 level, bam, 545, that was one of the levels I had. We recaptured 546.5, recaptured 548. So it was showing strength, recapturing multiple levels, not a dead cat bounce. That's how you know it's a dead cat bounce. We can stay at one, it stays above the level it recaptured, and it can recapture strong enough to recapture the next level that it lost. Okay, in this case, we recaptured 546.5, then recaptured 548, and it was strong enough to give us a nice little bounce back to the upside for a few dollars. Okay, so it was, in my opinion, it was tradable. For the inexperience with price action, maybe they struggled a bit, but for the more experience, I believe you guys probably did okay, or probably a little bit more than okay, trading with the traps and all that. But you know, this is what happens when we have choppy days, okay? It's not beginner friendly, very indecisive, up movements, down movements, not a trend day, okay? I love those trend days, but just remember this. Chop days suck, But in order for us to have those awesome trend days that we love, we need the chop days to balance it out. Chop days lead to trend days, okay? We'll see what happens today, though. I tell you this, I'm looking at the daily chart. We had the breakout of the multi-month trend line. You think that would attract more longs? You think that would attract more buyers? And so far, that is not the case. So is this a liquidity grab? Is this a stop loss hunt, or we actually are bullish again? We'll see what happens today. Only the price action knows. Only the price action can fully tell us. As usual, I'm giving us the bear case and the bull case. It's very similar to yesterday's video, where I'm watching 551. I have this fib level 549.6. I have a 548 level, and then of course 545, which held as yesterday's low. Now I'd really like to see that 545 fail, at least if I was a bear, and that should give us a nice drop down to 543.3 and 542 with 540.6 below. Okay, now I have a fib level of 539.5. But right now, based on this multi-month trend line, 540.6 is around where it's at now. So bears, if the last couple of trading days, few trading days we had were stop loss hunting, they need to show follow through, break back below this trend line. Okay, so it's going to start with 549.6, 548, and 545. But if we're talking swing trading, if we're talking is a top in, Uncle does not feel comfortable calling a top until we break back below this trend line, which would need SPY back below 540.6, breaking down 539.5, 538, 536.3, and so on, okay? But like I said, it will start with the breakdown 549.6 and 548. Play it level to level and use your runners for the home run move, for the potential home run move. Okay, now if we are to stay bullish, obviously we need to keep this breakout intact. But playing defense is not enough. Bulls need to play some offense and keep pushing higher. We've yet to fill the gap that we had from April 2nd, early April. So the gap, there's that. Had a few gaps and it still hasn't been filled. To fill it, staying above 551 and 549.6 lowest should give bulls a chance at more upside. Okay, 552.5, 554, and 555.4 are the levels to watch. Above 555.4, which is a fib level, that would be a gap fill, and it would be bullish, putting the 50 daily moving average in play. The 50 DMA is around 560-ish. Okay, and above 560 would definitely be bullish continuation, because a recapture of that 50 daily moving average would be very bullish. Okay, so if we're all talking bullishness, stay above 549.6, clearing 551, 552.5, 554, and 555.4. Okay, above 555.4, go for the gap fill and clearing it. That would put the 50 in play, and above the 50 DMA is definitely bullish. Okay, right now it's still looking like the breakout is intact. And since the breakout is intact, I'm going to give the bulls the benefit of the doubt and say that it's still bullish and lean bullish still. Okay, I'll be happy to switch back to bearish if the price action tells me. I'm not going to argue with the price action, but right now, still signs of bullishness. Okay, it's still alive. The bulls are still alive. QQQ also with his own version of a breakout. Chop day yesterday as well, overall intraday. But it did, I had this purple downtrend line starting from March 3rd high, connects with March 25th high. Also we had a breakout of it from last Friday. Yesterday we treated that line, that area at least, as a support. So question now is, will they be bullish follow through now that we see that the trend line has turned into support? If the answer is yes, then obviously I need to see once again resistant levels clear. I have one at a support at 472. I have resistance at 473.5, 475, 477, and 480. Okay, if we can clear those levels, I'd be bullish, especially if we clear 480. If we clear 480, we'd be nicely above, comfortably above the 50 daily moving average. Put in 483, 47 or higher in play. The 200 daily moving average is around the 491-ish area. All right. If we are to switch back to being bearish, 472 and 470 both must fail to put 468 and 466.4 in play. Now, 466.4 is a fib level, but below it would be a very bearish setup because that's a break back below this trend line, and that would put triple Q in false breakout mode. False breakout is bearish. NVDA has an inside candle setup, which signifies chop. Chop range right now is 105.7 up to 112. I'm going to go down to 105 because that's one of my levels. So 105 to 112 is the chop range. If we are to be bullish, 108.6, 110, and 112 must clear. Above 112, Uncle Charters would continue his bullishness. Okay? From here, 107 and 105 are support. Based on the mother candle's low, below 105, based on this setup, if that level is lost, the inside candle setup ends bearishly. I would be bearish below 105 on NVDA. Here is Tesla, also with its own breakout. We had a trend line since December 24th of last year. Broke it out on Friday. Yesterday, we treated that trend line as a support. So you see the trend line that was resistant for a while turning into support. We got look at the context, all right? So as of right now, I have next resistance at 287, 290, and 292. If we are to be bullish, 287, 290, and 292 all must clear, and that should send us a lot higher back to the 300s, okay? If we are to get bearish, I have support at 285, 283, and 280, guys. If those levels fail, we're likely dropping down to 277 and 275. Now, 275 is a fib level, but also based on the downtrend line. So if we are to switch back to being bearish, we have to see price drop below 275 for the false breakout setup. Coin, well, last Thursday, Coin recaptured the 50 daily moving average. Yesterday, it back tested the 50 and it treated like support and found some buying pressure, okay? So let's see if this bullish continuation. Staying above 207 is a start. Clearing 210 and 211.6 would be bullish follow through. And send us a 213, 215, 217, 220. And I have a fib level at 222, okay? If we are to get bearish, getting back below 207 would be a start. And then I have support at 205, 203.7, 202, and 200. And then the 50 daily moving average is around 196.7-ish, okay? If we can lose the 50 daily moving average, that is when I would switch back to being bearish. And here is Coin looking like, I don't know, I had a wedge there, but I mean, look at that. It's not much action. It's not giving us a strong breakout. We'll see how the day is today. But I tell you this, if we can pop up above 26 and 28, I would be bullish. 26 and 28, above that, I would be bullish. And otherwise, I'd still be bearish. Loss of 24 would send us lower, most likely, a lot lower. All right. Thank you guys so much for watching. I really appreciate you guys being here. Remember, master traders, money magnets, that is what you guys are. Love y'all. Peace.